A new report from property data provider Adam shows that about 1 in 37 homes were what they called seriously underwater.
According to Adam, 1 in 37 homes right now are currently underwater. Now that is better than back in the pandemic times when it was around 1 in 15. But with all these huge price gains on homes, have things finally come to an end? As we all know, the Fed again paused moving interest rates recently. And in fact, there are people now, depending where you get your information from, that speculate we may get maybe one interest rate cut this year. Personally, I don't feel like we're going to get any rate cuts this year, but I would like to know all of your comments on how you feel things are going to go on this year in regards to the interest rate. Now, if interest rates do come down, is that going to fuel another run on housing prices anyway? Not so fast. I think we need to take a look at a few other factors that may impact housing more so than just the interest rates alone. Now, let's look at property taxes.
Sky-high property taxes back in the spotlight at the state capitol, and time's running out to do something about it.
Yes, everywhere. Property taxes are just skyrocketing. Now, they differ widely when you do look at a state-by-state comparison, but here are the states actually with the lowest median property taxes in 2023. Now, the states I'm talking about are West Virginia, Alabama, Arkansas, and Mississippi. They're all below $1,000 annually on property taxes. Now let's look at the states with the highest median property taxes. And these are crazy numbers here. And the states that I am talking about are New Jersey with the highest at $8,498. And then we have Connecticut at $6,103. And we have New York rounding it out at $6,043. Now, other states with the next highest property taxes amounts were California, Vermont, New Hampshire, Rhode Island, and Massachusetts, where the median annual payments were between $4,000 and $6,000. So as we can all see, a big increase in taxes. And again, I would like your comments on how much your taxes maybe have increased over the last handful of years on the properties that you own out there. Now let's look at the next thing I feel that could impact home prices, and that is the actual homeowners insurance. Yes, with the higher interest rates and the higher property taxes, now higher homeowners insurance premiums. Many homeowners now in some areas of the country are even relocating to different areas now. And in fact, according to Redfin, 70.3% or 3 in 4 of Florida homeowners and over half, yes, half of California, say they or the actual area they live in has been affected by rising homeowners insurance costs or changes in their coverages, or even the insurers dropping them all in the past year, all because of natural disasters. This again, according to Redfin, homeowners living in areas where insurance premiums are surging are at risk of seeing their property gain less value than homeowners in areas with stable premiums, and in some cases, they may even lose money. Also, homes with low disaster risk and low insurance costs will likely become increasingly more popular and the more valuable as the dangers of climate change intensify. Now, one thing that I always tell the clients I work with when they're buying a home is to always call your insurance agent ASAP once you are under contract to see how much your insurance premium will be, and even if that property is insurable at all. Now, if you need any help with any of this, please reach out. My contact is down below. I have people throughout the country that can help you out with this as well. Now, let's get back to the report from Adam that 1 in 37 homes are currently underwater. Now, according to CoreLogic, in the fourth quarter of 2010, it was a shocking 23.1% of homes were underwater, totaling over 11 million homes. Now, since 2010 things improved significantly with approximately 1 million homes underwater, or 1.8% of homes that have a mortgage on them. Now, most borrowers today, they actually have more than 50% loan to value on their home, and 40%, they don't even carry a mortgage. Those are definitely not really a sign of a housing crisis just yet. Also, back around the financial crisis, there were all kinds of loan products that got people into serious trouble. And when I owned a mortgage bank at that time, I personally saw people taking out 3 to 5 year adjustable rate mortgages. These mortgages had interest-only payments. They didn't even put any money down, and their debt-to-income ratio was almost or above 50% of their income. And when we even dealt with new builds, people would always focus on their payments that were based upon property taxes of the initial land, since taxes were always paid in arrearages, and they did not even think about in the following years that those property taxes would go from, say, $100 a year based upon the land again to almost $3,000 to $4,000 a year, which is a huge significant change, period. Now, with the changes in lending, I don't see people getting these loan products that caused a lot of the foreclosures back then. But as of recently, I have seen some of these programs resurface. Now that I represent people as a real estate agent, I get emails all the time from lenders that are offering these products that again have no money down, or they're interest only. And also those good old stated income loans that got everybody in trouble back in the financial crisis as well. So I guess we really didn't learn anything from back in those days. And I guess time is only going to tell us what is going to happen moving forward if those products all come back into play. Now, these loans caused most people at that time to be financially stressed when the rates started to adjust, and when people couldn't pay, the foreclosures kept mounting up, and that is what caused those home prices then to just come crashing down. Now let's fast forward to today. We so far are not seeing too many American homeowners financially stressed. COVID created the all-time historical low rates we had, and also the wages kept increasing during that time, and the housing market has just been on fire. But as time goes by and that stimulus is over and the loan modifications mature, along with the ticking time bomb of these commercial loans that are all coming due, are we going to see a major crash, or will it just level itself out? My prediction is, I think things will ease, but will be nothing like the financial crash that we had been through. And I would like your thoughts on that. And also, another thing to consider, my prediction is, I think things will ease and level themselves out, but it won't be anything like the financial crisis we had early on. Now, what are your thoughts on that? I would love to hear below. And also, another thing that we need to consider is people are also staying in their homes longer. Yes, in fact, in 1985 through 2007, the average was around 5 to 7 years a person would stay in their home. And then from 2008 to 2024, it's now jumped to 11 to 13 years. Now, a bit of a concern here are the people that purchased homes at the height of the market in 2022, as a lot of these people purchased with little down payment. So if they run into any type of a hardship, they may not be able to cover the money owed, and especially the higher property taxes and also escalating prices of homeowners insurance. This could be the very foreclosure that will happen to these people if they experience any type of financial stress, and also more so purchased at that height of the market with no money down. Right now, though, it's not a major problem, and especially compared to the recession of 2008. Currently, we are around 44,000 foreclosures as of Q1 of 2024. And one question I have in my mind, and I'd love your thoughts down below as well, if things get bad again like we had in the past, do you think the government is going to step in again and try to help with any type of crisis we may have again? Please leave me your thoughts below, and also like and subscribe. It really helps build my channel. And also my contact link is below if you need a real estate agent out in your area, or if you would like to discuss investing in real estate. And see you next time.